Hi guys, Ray here from Switch Finance. I'm going to give you 3 tips today on how to improve and protect your credit score. The lenders now have adopted CCR, which stands for Comprehensive Credit Reporting. So what does that mean in layman's terms? Is nowadays there's a lot more data fed onto your credit file from any banks or lending organisations you're dealing with. So they now put conduct of your loans up to 24 months historical data on whether you are paying them on time, whether you're in arrears, whether you're paying them 1 or 2 months late. So that information is all there, it's transparent. So when a lender looks to lend you money, they don't know you personally, so the only way they can judge you, and one of the biggest ways they judge you is by this credit score. All right, so really important to look after that. So I'm going to give you 3 tips on how to improve or protect your credit score. Tip number 1, ensure you have direct debits set up, automatic direct debits set up for your home or investment loans. I still can't believe there are people out there that do it manually and don't have an automatic direct debit set up. And those are the people that when you do get their statements, their loan statements to do a refinance, is they're behind or in arrears or have a lot of dishonours on their statements, which basically rules them out for new lending. All right, so make sure you have a direct debit set up. Makes it a hell of a lot easier. Tip number 2, if you're finding you cannot completely pay your credit card every month when due, and I don't mean the minimum repayment, but pay it all, so you are not paying interest on that debt. If you can't do that, then you really need to get rid of that credit card. You shouldn't have it. Try and close it down, okay? When you use the credit card properly, you don't pay interest on it, okay? When you pay interest on it, the bank loves you because that's one of the biggest profit centers. Tip number 3, keep it simple. Try and have all of your automated direct debits for certain bills. You might have your electricity, your rates, your car rego, etc. Coming out of a savings account. If you do operate with a credit card, I encourage you to use your credit card and not the savings account. That way you don't have to always monitor that account and make sure you've got enough money for all the various direct debits that are coming out. If you don't wish to have a credit card, or you listen to tip number 2 and you closed your credit card, which is fantastic, don't have a multitude of accounts paying a multitude of different bills. It gets too confusing. Try and minimise and just have one main transaction account where all your money goes in and all your bills come out of. It's a lot easier to manage. All right guys, all the best, and as always, reach out to us if you have any concerns or queries.